Now, African central banks aren't likely to follow the global trend in the easing of a monetary policy. This as currency pressures and sticky inflation persists. EY's Africa chief economist Angelika Goliger joins us with her analysis on the interest rate cycle for African territories. Angela, thank you so much for your time and good afternoon.
Good afternoon, Orlando. Really good to be here.
And maybe let's talk about what we've seen with inflation around the world. I think we certainly saw developed nations really peaking quicker. It looks like it's taken longer for African countries to go through inflation challenges, but also it looks like it's been for different reasons.
Yeah, no, exactly. That's right. I mean, each country has its own unique dynamics at play, right? Inflation was driven by various factors, whether it was, global supply chain challenges that we saw with, the whole world being affected, and also local dynamics, right, around reducing subsidies on fuel, challenges around agricultural production in the wake of droughts and challenging weather and climate patterns and so on. So it's also right in this global world at the moment. This keeping currency strength is quite important for countries, and that's also kind of where we've seen countries struggle as well.
So I must talk about the issue of currency strength. So, I mean, a lot of it is, of course, pitching African currencies against the US dollar. I know as a South African rand, we're barely making it against the dollar. And the truth of the matter is that the dollar is always going to be very strong. We come off this high inflation environment in the US where, of course, there was lots of incentive to be invested with the dollar. And that, of course, have also had an adverse effect on African economies. Do we stand a chance, Angelica, as long as this is the way in which the global economy is structured?
Yeah. And I think, one of the main reasons why, a lot of African economies have been holding on reducing interest rates has really been on the back of what the Fed is doing. And that's one of the reasons. And why it really matters, the decisions of the US Fed in terms of their own interest rates affect global financial conditions. And that particularly shifts, conditions for emerging markets. And of course, Africa being quite key in this. And, what we're seeing is these countries are trying to protect the value of the currency because a lot of inflation is imported, right? So that's, kind of one of the reasons why we've kind of seen the effects coming through in this way.
Well, that said, I also want to speak about, some of the countries that we've seen here that are going through inflation issues, mainly because of them trying to respond to other fiscal pressures. Nigeria comes to mind. I think Ghana also comes to mind. They're also a kind of in their own structural journey there in terms of reforms in their economies. I want to keep to talk about that as a driver here. Is this also, the kinds of causes for high inflation that are a matter of time, Angelica? If, we just let it all kind of play out, it might take a while. We should see inflation normalizing there, unlike in places where inflation is possibly, caused by other issues, climate change and the likes.
Yeah, no, exactly. I think, some of the decisions that governments have made have been the right calls, right, around reforms, around, focusing on, keeping the fiscus strong. And yeah, so that's some of these challenges. I know they really are challenging for the continent, but we are seeing already in some parts, right, inflation starting to ease. We saw that in Ghana with inflation slowing in June to 22.8% from plus high 20s plus 30s. So we are seeing that eventually it will come through. Countries like, for example, Nigeria was still seeing inflation being extremely high levels. The most recent print showed inflation at the highest point in 28 years. So it's a matter of time, unfortunately. But we are seeing, for example, Egypt is another country that faced really high inflation, and inflation seems to be slowly, coming down. So it really is this kind of, and there's this quite data-dependent approach that all central banks are using, and it really is around waiting to see the proof in the pudding, right? When actually inflation, different aspects of inflation come down, that's when central banks will start moving.
We've also seen Angola, Nigeria, I think are the two that come to mind, responding with higher wages. Wage kind of price inflation can also be very sticky. It can lead to a delay in the impacts of higher interest rates as a counter. I'm wondering if we're concerned about that at all.
Yeah, I mean, so that would add some pressure, and we've seen, for example, a lot of the wage inflation actually resulting in sticky services inflation, right? Which we've seen in a lot of developed economies. So yes, that can kind of feed into to other aspects of inflation.
And then I must also ask you here about inflation targeting as a tool. We know that this isn't something that many African countries do too strictly. If we
Yeah.
had lower targets, would that pragmatically lead to better inflation outcomes?
Yes, and I think this is where having strong central banks, right, that are independent is really important, and we are see and believable, right? And I think over the past few years, some central banks have lost credibility in terms of their acting too slowly when it came to the spikes in inflation we saw sort of post pandemic and so on. So I think credibility is really important, and we do see the results of that now in central banks coming through. So, for example, in South Africa, while inflation is still quite sticky, we are seeing eventually the results of this kind of inflation targeting, and the South African government, the Reserve Bank, is looking to actually target a 2% inflation, because really, ultimately, it is better to kind of target on the lower end, and just going forward to really manage inflation strongly.
Before I let you go, Angelica, growth prospects as a result of the high inflation that we're seeing, and of course, then higher for longer interest rate trajectory. Can we expect that we might have to come to a place closer to the end of the year where we revise sub-Saharan African growth a little bit lower?
Yeah. Yeah, I guess, I mean, it's a global story, right? Because we're not alone in delaying our interest rates decreases. We are seeing kind of caution, obviously, from the Fed, from the European Central Bank, that while they did start the rates decreases, they did hold in the last month, and they're still maintaining this data dependent approach said for September. So I think it's more of a global story, right? That growth is going to be a bit, it's going to be better than last year, but still not this kind of significant recovery. So it's just going to be kind of stable but moderate growth, and hoping once kind of the interest rate hikes really start taking hold across the world in 2025, we'll see some growth come from that.
Well, Angelica, it's been a pleasure hearing from you today. Thank you so much for taking us through this one. That was EY Africa's Chief Economist, Angelika Goliger.